Hello everyone, this is Juan Sarmiento and today is Friday, September the 24th. Okay, I have two trades to show you, two new trades, but before I do that, I have to go quickly through the existing trades and to see if there is anything there that needs to be rolled over. Next week will be, the next expiration will be October the 1st, so October the 15th, like in this Apple trade, there's plenty of time to see that work. So I'm gonna pass on that, just quickly go through what needs to be rolled over. Okay, so I'm gonna go through every trade here. As you can see, I go down the list. Hello, W. Okay, this is Morgan Stanley. That will be 1 week after next week, so we can wait on that. Nike, same thing, October the 3rd. Nvidia, 15, and the only one is this Yum trade. You can see that is due to expire next week, the shorts that is. So it's 7 days, so this is the time where you want to take some action. And what I propose is to close this trade, and this is what this thing will do, right? I just have to select all of them and say analyze closing, and first you say double diagonal, and then you modify the long, the January ones, to 6. To do that, you need to say custom, and then you can change. And that creates your trade exactly as I had it here, and that would close it. And you see the flat line here, okay? All right. Why would I close it? Well, because hasn't made me any money, and so I don't want to prolong my agony, so to speak. So let's go to the monitor tab here, and you can see that I entered this trade back in June the 30th, and then did a rollover on August the 27th. So we can copy these two by right-clicking and say analyze trade. Okay, that takes it here. We ignore the closing trade for now, and do the same with the second trade and hide the current position, and the simulation is essentially the equivalent to the current position. And you can see that I have a loss here of 580, and you know, that's about as big a loss as I want to take. If this was a little less, let's say $100, I might do the rollover, but I don't think at this point there is any reason to do that. I just as soon close the trade and move on. Okay, and this is what we're gonna do. That's the reason why I do it, because I haven't made money. You can prolong and make your loss a little bigger, but I just as soon move on, and then we'll have cash for new trades. There it is, filled. Okay, now we see how much money do you have available. It says option buying power is $47,000. So we can probably make as many as 5 trades or something like that before we can use that up. Okay, now I have here 2 suggested trades for today, CRM and COP. Let's start with CRM, and you can see that all of my conditions here, except for the current IV percentile, 34% is a little high, okay? But I'm willing to take the risk. Copy that trade and then bring it here, and then we'll deal with that. Okay, so here it is. I've told you before how to create these. Okay, we can change this around a little bit. The stock is trading really at 280, so we can change that to 280. Okay, let's create this from the very beginning. Okay, so let's go to add simulated trades, and I'm going to look for the back month. Should be something that is more than 90 days to expiration. So December here won't do, so let's go to January. Okay, and here we look at the current, at the strike price that is closest to the current trading price, which is 280, and here we say right click and say create analyze buying trade. We're going to say straddle. Okay, we can increase that to 2. And that's 2 straddles. And now we go to the front options, which should be something like, let's say 29, could be 22 of October. That's 35 days or 28 days. Let's do the 35, okay? And again, 280. Press the control key and say, analyze sell, straddle. So we're selling the front month straddle. And by pressing the control key, we have created a combination trade. We don't need to add anymore, so that's 2 to 1. The back month, 2 straddles, front month, 1 straddle, and that's our trade right here. Now, we say create duplicate order, and you can see the mid and the natural is what is going to give you your here your current here. The liquidity goes from by putting the mid and the natural for the trade. So 480, 46.35, 56.35 versus 46.65. And the difference between them is 3%. And it says do not trade, but that's really, really, really close. So see, 34.35. 35. Okay, that's 3.5. That should be less than 3%. Okay. Okay. So what we can do is see if the 22 of October will be any better. Okay, once again, create duplicate order. $56.55 is the mid, and $58.35 is the natural. Again, very, very close to the 3%, not quite right. Okay. I think it's because what I had was not the 280, but the 270. Yeah, the 270 is what we had, and that seemed to be better. So let's copy that. And that's a better. You see the difference between the volatility of the front month and back month is tighter here. Okay, so which one is better, this one or that one? I think they're very, very similar for what I want. So I'm going to stick with this one here then, the 270. I know it's a little better to the upside. Okay, a little better. Okay, so we can do that. And this is the one that I had here. So I already make the calculations here. But let's repeat that. The front month, the back month volatility, you can see I read it here. I'm showing it at the bottom right corner of your screen. That's the volatility for the back month and front month. So we're going to enter it here in the spreadsheet. 29.25, 29.13, and 28.19, 28.05, and that's perfect. Less than 1%. The price, the mid is 54.78. That's from here. But you can say create duplicate, and that shows you your mid and your natural. Let's use that. 54.65 versus 56.45. That's 3.2%. Okay, once again, low liquidity, low current IV percentile is high. Okay, so it's, but look at this earnings. It's such a high beat. I'm very tempted to do the trade anyway, and I will. Okay, simply because I think the stock will continue on higher despite the drop in the markets. Okay, let's do that. And the other thing is we need to make sure that we have a 10% of our account. Yes, it is. It's less than that. Is $5,000, 5,478 to be precise. Let's send that off. And we wait until it gets filled. And there it is. Okay. The other trade is COP. Okay, here we have the same type of trade. Okay, we enter it in the same way. Click here, and there it is. You can create it. Once you created it the way I did with the straddles, you can save it. You can copy it from the Analyze tab and put it in your spreadsheet for later use. And here is our trade. Okay, let's go to the chart. The earnings is, they were expecting 1.15. It ended up being 1.27. So I have that here, the earnings. Okay, then the volatility skew, it's very, very close, meaning that the front month and back month options have about the same volatility. 34.45, 33.02, 38.85, 33.85, 32.54. Difference of 0.54%. I'm looking for 3%. That's great. Okay, liquidity is the price. 15 the mid versus the natural. To see the natural, say create duplicate, and here's the natural at 15.7. And to see the current IV percentile, we go to the trade tab, all products, scroll down to where it says today's option statistics, IV percentile 13%, that's a low, current IV percentile, and so we have pretty much what we need except for the liquidity is a little low, but everything else is great. So then we create the trade by saying create duplicate, confirm and send, and then we're going to say multiple accounts so that then we can adjust this. I'm not going to enter it here, I'm going to enter it here, and I'm going to increase the quantity until it hits 10% of my account or less. Okay, 9,000 is too much, 7,500 is just fine, so let's send that off. I chose October versus January, okay, October 22nd. And then when it gets filled, we are in business. Let's go to the monitor tab here, and we might have to adjust our price. Yeah, you see the price that I have is 17 versus 40, so versus 24.24. So I say cancel, replace, unlock it, and lock it again, confirm and send. Adjust it until it gets filled. Right now it's the same price, the two of them. Give it a minute or two. And that's the problem with the liquidity. If it's not liquid enough, you're going to have that issue. Okay. Before the end of the day, this trade, I will make sure that it gets filled. Okay. And that's all there is for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.